So, welcome back to another episode of the Web3 Insights podcast. Today, we're joined by Boris Redfern, who is the head of capital markets at Kasu Finance. Casu Finance is a next generation RWA lending platform that's basically building hybrid infrastructure for the future of private credit. With a token launch on the horizon and a pipeline of institutional grade borrowers already being activated, Casu is taking a radically different approach to DeFi lending, merging DeFi native junior capital with senior TradFi structures to unlock real world impact and yield. So, Boris, thank you so much for coming on.
Oh, thanks for having me, Aaron.
Pleasure. Let's kick it off with a bit of background. How did you get into the Web3 space, and what inspired the creation of Kasu Finance?
Yeah, I'm a pretty recent convert. I'm still early, but I'm pretty recently arrived into Web3, and to be honest, it happened completely by accident. I have been working in vanilla private credit, arranging lines of funding for non-bank lenders and corporates for a couple of years now. Actually, I mean, time flies when you're having fun. 3-4 years, and five, and then I bumped into an old school friend actually, who was someone who I said no to when they told me to buy Bitcoin in 2013. Looking back, probably the best bit of advice that I ever ignored.
Yeah.
And he was looking for somebody to help him with the capital markets function in his Web3 business. So I worked with him for a little while, and kind of that was the initial inkling that there was an interesting, but largely unexplored intersection between private credit and Web3, because although like prima facie they don't look like they're easy bedfellows, they're actually quite similar in many ways. They're both at the moment they're both highly frothy, popular, interesting to both retail and institutional. They're both full of incredibly intelligent people. And they're both kind of at the forefront of the tech world on the Web3 side, and of the finance world on the private credit side. So I felt strongly that there was some way that we could marry these two together. They also are obsessed with each other, but they never talk. So it's kind of like it's kind of like the boy and girl who meet each other at a school disco, but they're kind of talking to all their mates about each other, but they don't get the courage to actually send that first text, "Hey, how you doing?" And so I kind of wanted to be the facilitator, meddling friend who brings those two crushes together. And then vis-a-vis Casu, I was in Singapore at a conference. They were up on stage. Luke Loam, the founder and CEO of Casu, was up on stage. And Luke, if you ever meet him, he's pretty magnetic, born salesman, and he's up on stage wearing, I think he's wearing like Hawaiian shorts and a button-down linen shirt with shades on, and he really pitched me without knowing that I was there. So I ran up to him afterwards and I said, "This has to be a securitization. If the credit quality is as good as you're saying it is, you need to do a securitization. This is going to be unbelievable." And he, to his credit, he kind of said, "Okay, let's have a talk." And we went and had a pina colada in the pool and hammered out what we could do. And the rest, as they say, is history.
Amazing. That's an amazing story of how you got into it as well. Very similar to mine, actually. I had a friend say to me about getting into Bitcoin probably around similar time, and I was like, oh, it's just a bit of a fad. And it's amazing how many interesting how people say they sort of fell into the space. And again, very similar to how I got into it as well. But for those hearing about Casu for the first time, how would you describe the platform in simple terms? What's the mission?
In simple terms, in a sentence, it's democratizing access to structured finance for the man on the street. And that's a very, very 100,000-foot view of what we're doing.
Yeah.
Leon Plubidis, who's kind of head of strategy and does a lot of operational work and legal work, has been incredibly At odds with a lot of people in Web3, he's been circumspect and careful and highly focused in how he's architected the whole setup. So what you do as a retail, what you would do, Aaron, is you deposit USDC, USDT with Casu, and then that's used to lend into one of the strategies that is correlates with the lending strategies that are being used by our JV launch partner Apsium. And your funds aren't pooled, because otherwise if funds were pooled, it becomes kind of a managed fund structure, and that falls under a whole mess of legislative requirement, right? And what then we've done is we take those pools of funds and we use them as the junior capital in what's called a structured financing arrangement, whereby, again, in very, very simple terms, I'm not going to go into the full detail because we'd be here for at least the rest of the day. Basically, the cash goes into a bucket, and then that bucket fills up, say, 10, 15, 20%, and then we pour institutional capital on top of that. Now, the upside of you being, the retail investor being junior is you're levered, right? You're leveraged by that senior capital that's been poured on top. So it means that you can get very good rates of return. And by being very circumspect and careful with our choice of JV partner, Apsium, who's done 8 years of transactions, over $20 million out the door, never lost a nickel of customer money. We can have with pretty high level of confidence that junior capital is not going to be degraded. And if it is degraded by some black swan event and it gets past all of these protection mechanisms that Apsium has in place, which, again, we don't have enough time to go through into detail, but suffice to say, Apsium lends to accounting firms and their clients, and again, 8 years, tens of millions out the door, never lost a dime. A lot of things have to go wrong all at once. The accounting firm has to fail, the underlying client needs to fail, all the bank accounts need to be changed, etc., etc. But let's say all of those things happen, you'd be impacted with one invoice, so you wouldn't even really notice it. Your principal wouldn't be degraded. You would maybe make, you'd make 15 basis points less in interest that month, but the odds of a systemic blow up, I mean, the world would kind of need to stop spinning in order for that to happen. So you get levered returns. Your risk profile is not that high. There's no such thing as a risk-free trade, so I'm not going to say you've got no risk because I'm pretty sure that's illegal. But your risk profile is very managed. You're levered by that institutional money on top of you, so you get very good risk-adjusted returns as a retail investor.
Yeah, amazing. We're just around the corner. I don't think we're far away from your token launch. What can you share with us about, the utility of the Casu token, and what role does it play in accessing yield and protocol rewards?
Yeah, absolutely. So the Casu token has got a number of inbuilt utility functions to it. The first and most major of which is you get to participate in the yields that the protocol itself earns for facilitating these transactions. So token holders, basically earn in effect, I don't want to use securities terms, but what appears as if it were a dividend, right, for holding the token. The second major one is an ability to access new credit strategies early. So we've talked about Apsium a lot, but there is a kind of a roadmap to having new lending protocols on the platform, and those are going to be oversubscribed quite quickly if we have the kind of success that we envision. And because you're just the junior capital, so you're only providing 10, 15, maybe 20% of the money, those may be very quickly oversubscribed. So being a large token holder might give you access to new and exciting credit opportunities, which would be closed off to people who don't hold the Casu token itself. The other thing is, Casu tokens act as, I suppose, a bit like, frequent flyer points, air miles, in that they allow you to redeem a lot faster. So as it stands, because the money is lent out in the real world, we can't offer, atomic redemption. And so what we can offer, however, is a maximum of 90 days wait, or a minimum of 7 days wait. It's done in 7-day epochs. And so the more Casu token you hold, the faster your redemptions will be processed.
Yeah. Okay, cool.
That's just a flavor of the kind of token utility that we offer.
Yeah, no, it's amazing. On the capital side, you've got major layer ones and VCs involved. How have you approached, institutional fundraising in a space, still rebuilding after, 2022?
Yeah, I mean, it's not been easy. I would never say that. I think anybody who's fundraising right now in the Web3 space is realizing that availability of equity capital is tightening very, very,
Yeah.
very fast. However, the good thing about what we have is, number one, we really hammer the following points. Point one, we have had demonstrable, massive institutional capital interest on the lending side. We can point at over $500 million worth of term sheets that have landed in our inbox over the last 6-12 months. That's point one. Point two, we're profitable pretty much from the 6th month of operation. This is not what I like to call a Web3 mud pie, where it just exists to exist, and the functionality is not really there, and the path to profitability is not really there. Casu, and especially Luke, founder and CEO, we've taken a pretty mercantile approach to this whole thing. And the first question on everything we do is, does the economics of this work in the long term? We're not interested in entering into partnerships that don't make any sense. We're not interested in going down any blind alleyways. That the end question has to be, does this, drive revenue for the protocol? So that's very much something that's front of mind, and I think that equity investors have responded to that. And then in terms of major L1s, we've always viewed that as, we have to, insofar as they're offering us cash, great, but we also have to make partnerships which make sense in terms of strategy. So hence why, XDC, etc., have gotten involved on the investing side, and we're kind of very very much looking forward to building with them rather. So yeah, and him being Sean, and also Angus at XDC. So quick shout out to the two of them. Their support is very much appreciated, and that partnership is growing in strength and gaining ground. So yeah, we've taken a pretty rifle shot approach to fundraising, because we don't need to raise a huge amount to achieve the goals that we have.
Yeah, amazing. Let's zoom into your hybrid credit model. What makes, this sort of multi-tranche capital stack different from, traditional DeFi lending protocols?
Yeah, I mean, I think the number one differentiator is transparency.
Right.
A lot of the existing Web3 lending protocols have historically, in the case of Goldfinch, not offered an enormous amount of visibility as to what is going on with your money. Or, to bring things more recently, I think there's also a little bit of, I suppose there's a little bit of kind of hedging, in terms of hedging into treasury notes and things like that, and not putting your money fully to work. So it's kind of a bit of a Goldilocks equation of very, very obscure what the hell's going on, and almost too vanilla. I haven't put my risk capital out there to be at least partially put into T-bills, right? And so what we're trying to do is split the diff and say, okay, every nickel that you give, you're going to have direct visibility on where it's flowed into and how it's been deployed. And I think that having that commitment to radical transparency not only is true to the spirit of DeFi and Web3, but also is a really big boon to not only retail, but also institutional investors. So that's kind of, I would say, that the key differentiator. The other key differentiator, I suppose, is the fact that we are almost certainly, I mean, I've not seen any better risk-adjusted returns of any other DeFi lending protocol. There might be lending protocols that are outperforming because they're offering, tokens to juice returns, and so it boosts their APY, but I find quite an artificial and an unrepeatable way. But in terms of solid, repeatable, year in, year out, decades long risk adjusted returns, I just don't know if I've heard of a single other actor in the space who can come close to us.
Amazing. That's really cool. Obviously, we spoke briefly earlier about, and you mentioned about, you're working with Axiom as your anchor partner. Now, I know these guys, are a $3 billion billing engine, and as you sort of mentioned as well, with 0%, historical losses. What does this deal unlock for Casu and particularly your borrowers as well?
Well, I mean, Axiom are an unbelievably interesting business. And as you rightly point out, they started out as a time and billing management software, and then they've added this lending capability to that, using the vast amount of data, etc., that they gather on all of their clients. Their clients are also some of the most reputable and kind of trustworthy in terms of creditworthy clients you could hope for. They're accounting firms, they are law firms, they are consulting firms, professional services businesses, and so you have as much confidence as you can possibly have that they will repay. What does that unlock for Casu? Well, for Casu, it unlocks access to an enormous ocean of potential lending targets who are, as I've mentioned, of the highest possible quality. For our borrowers or the people who are lending through the platform, I suppose, lenders, I think, would be more accurate. It unlocks the same via the Casu platform. They can get exposure to, historically, how on earth would you or I be able to what would we do? Walk up to our local Wolters Kluwer or other major accounting firm and say, hey, can I lend you guys $500, at this yield? It was never there. So it's a whole new asset class, or a whole new revenue opportunity or wealth building opportunity for anybody who wants to use the platform. It's really transformational. And then one step further from that, for institutional lenders, this is rock solid, platinum plated credit opportunity to lend into, an Australian based but active in Canada, America, UK, and Australia, an Australian based credit originator that has probably the best track record of any similar business that I've ever seen.
Cool. Can you also explain as well how Casu's system enables real-time, covenant monitoring, payment automation and structured risk? How does this set you apart?
Yeah, well, I mean, it comes back to the point on radical transparency that I spoke about. It's all visible, all there on our dashboard in real time. Our clients can watch the whole thing end to end, and so anytime a covenant is breached, you're able to see it. You're able to be notified. Payments, again, as I slightly touched on when I was talking about token or utility, repayments are all automated via epoch, and the amount of token you hold dictates where you sit in the queue to get repaid. Obviously, everybody under current ASIC, which is the Australian version of the SEC or the FCA, under current ASIC legislation, you have to be repaid in a maximum of 60, or it might be 90, but I think it's 60 days. And so we've automated all of that. Again, that's the work of Leon Plubidis and the rest of the engineering team. And structured risk, that falls, I would say 70-30, 75-25 Appium to Casu. As mentioned, Appium has got unbelievable data feeds up and running with all of its clients, and just has a capability to monitor risk and concentration limits, etc., automatically, because its lending clients are its software clients. So of the 3 billion plus of invoices that they manage via their system, a few million, are also lending clients. But that enables them to have a data lake that is kind of unassailable in terms of being able to monitor risk.
Yeah, cool. Moving on then, I think the real world asset narrative has been exploding as of late. I'm keen to understand, where does Casu fit into this movement? How are you positioning yourselves within it as well?
Yeah. Well, so post TGE, we are just going to be, heads down building. We have a lot of pipeline of potential new lenders that we could integrate onto the platform.
Nice.
So you should be looking out for new lenders being announced. You should be looking out for new opportunities to invest and to lend via Casu. We will be looking to onboard a CRO, Chief Risk Officer, full-time within Casu to assess these lending opportunities as they arise. And we'll also be via the platform, or via Appium, we've secured $30 million of lending risk capital via an institutional partner. So we'll probably have that all deployed within the next 6, let alone 12 months. And then we'll be looking to take down the next line of credit, which will be an order of magnitude larger than that. So, in short, new opportunities, a few new staff members, and a few $100 million of senior credit.
Also, from your side as well, you've built across both, Web2, TradFi, and Web3. What have your biggest learnings been in, and trying to bridge these two worlds?
We're not so different, you and I. I think that's probably the biggest learning. There's a lot of knowledge there. Like, there's a lot of prima facie knowledge, or kind of not prima facie, like inherent knowledge of how all of this stuff works, that is held on the institutional side. Because the common trope in Web3, right, and I feel like this is quite damaging, is we're kind of acting like a little brother and who has a big brother who he really looks up to, but because he can't really get his big brother's attention, he acts out and kind of says, well, my big brother's just a stupid, hulking galoot, and I don't need to listen to anything he has to say. That's how, like, Web3 people talk about TradFi, talk about banks, and talk, oh, we have to take them down, we have to bring them down. Guys, you are dreaming. It's not going to happen. Or fiat, fiat is trending towards zero. I mean, sure, but I just don't see that these guys are going to, number one, give up their hold on that power and that capability anytime in our lifetimes. It's just not going to happen. One, two. you know, do you really think these people are stupid? Do you like? I mean, they might be slow. Slow is one thing, but do you think they're dumb? They're not dumb. These people are very capable, and I think that the one thing that I came to realize was if we can just communicate a little bit better, and try to speak the language of Web 2 or Web 2.5 or finance with a bit more fluency, we can get a lot done. I mean, we can
Yeah.
do big deals and stuff like that. But this kind of teenage, well, I don't care. I'm building something in Web3 that you don't even get, man. It's just like, okay, cool, but it'll be a long, long time till they cut you a check.
Yeah. No, sure. No, I get it. I think I think that's a very valid and fair way of putting it as well. I don't disagree or with you in any way. I think you're completely right there. Thank you so much for sharing such a comprehensive view of what you're building. Casu is obviously clearly operating in the rare overlap of institutional rigor and DeFi innovation. So it's incredibly exciting to see them blend and come together. For anyone listening, be sure to check out Kasu.finance and follow the journey as we get closer to the token launch and beyond. And as always, don't forget to like, share, and subscribe to the Web3 Insights for more innovative projects that are leading the space. Boris, thank you again so much. Appreciate your time.
Thanks so much, Aaron. Have a great
Cheers.
day.
Bye.
Cheers. Bye.